Martin from Secret, channel for learning about trading and investing. Welcome to quick market analysis for tomorrow, April 20th, Thursday, expiry date 2023. We will basically be looking at what happened in the market and then try to learn something from it and plan for a better trade for tomorrow. So here we have the Nifty, which is 3 days down days, 3 dead candles, and still at a support. This is Banknifty actually, sorry. Yeah, in the Nifty also we have 3 days, 3 dead candles, and it's beautifully taken a support at 100 exponential moving average. It did break out from the price action point of view where it climbed above the 17,800, but it's a 1.5% of retracement that's happened after a rally of nearly 9%. Kind of the same 3 red candles, less than 1.5% retracement at a support zone. Change in variety bounce is possible here. Here also it is still at a support of the moving average. So the previous resistance from where it broke out acting as a support, and if there is a bounce up from here, that could be possible. Potential for that is there in both indices. And momentum has dipped, but still it's intact on the Banknifty, but it has slipped in the sideways and it remains there. Not too much, but momentum did dip in the last 3 days. That's what is summarized. Just to summarize what's in favor of the bears. It's a third losing day. But no, it has not lost much. 0.2326. Right, 25% of down move has happened, and total retracements of only 3 days, less than 1.5% both indices. Right, and it has been 11 to 12% retracement that happened earlier. We were in a downtrend, making new lower lows, lower highs, and that's after which the rally happened, and then we went 6 to 9% up, and then now we're again seems to be pulling back. So 4 red candles on the monthly is what you had, and that's what we are. Just to get a picture that we are not in a bullish scenario. We're still in a correction mode, right? We're trying to come out of that. Especially we slipped into sideways in the Nifty. Fyers had been selling in today also. They might have sold, and it's 9 days they paused it, but last 3 days they have been selling. And how much did they sell today? Let us come in on. I'll just quickly see that. It's a small selling, but they did sell. So that's what is happening, right? And the Fyers have been selling, and also they continue to sell, but very small. So that's all things. That was the bears. So news market is in a condition zone. It's showing green, and it's at the top of a descending wedge. It's trying to break out, but it's at a condition and a heavy resistance, so anything could happen. Crude has been spiking. Some call has happened today, but it's still very close to the 80, and it's above the median of the parallel channel, and then was heading towards the top of the channel near the 90 levels. Remember, we had a 65 kind of place few weeks back. So in an oil importing company, crude oil moving up, and the rupee is weak. It's not that great. Rupee is weak again, 82.2, spiking up and then heading towards the 83.5, the all-time high levels once again. The dollar had some depreciation that happened, but the rupee currency pair is not reflecting that yet. Upper interest showing short build-up since last 3 days, and the PCR is also close to the bearishness, 0.62 in the Nifty, but Banknifty it's closer to the bullish, as you can say, not actually bullish, but close, 0.84 or something, right? So upper interest a few days before the expiry. So tomorrow's expiry, not few days. Tomorrow's an expiry, weekly expiry of the April 20th expiry, and Nifty shows some weakness as compared to the Banknifty, the upper interest. So IT sector is what is dragging since several days. Today also it's nearly 2% down, and it's having the only sector that's having the bearish momentum. So it's all the factors that's in favor of the bears and not the bulls. The change in priority bounce, as I said before, we are at a zone where the previous systems could act as support in a bounce. It's possible in both indices now. Small retracement taken as support. Bulls could always hop for a bounce from here. Indices are not falling too much. It's 48 points to 20, another 40 points before that. So it's very less pullback that is happening. It's within the limit of less than 1.5%. 3 days, 1.5%. So it's not ready to break down and then go back there yet. That's why it's held the 17,600 level, and the 42,000 in Banknifty is intact. So it's a good thing. Momentum still in the bulls also, the Banknifty at least, even though the slip has happened in the Nifty. Trend indicator radius is in the bull zones, and in the short term we're talking about. All the indices is above the exponential moving average, all of them still above that. But the band still in expansion mode, it does not start at the contraction yet. So there is a possibility that it is a small pullback of a continuous 9 days rally is what you're seeing. Still it's having the bullish bias and it's in the upward expansion mode. So that's also in favor of the bulls, and big spike, in spite of 1% spike, it's still at 12.1, and it's still in the lower regime, so no problems there. So I did 80 index, got hit, but others are all fine. All the major sectors, FMCG, pharma, realty, auto, metal, all of them are in the bullish zones and from the short-term momentum perspective. All the major index heavyweights except the IT, Infi, and TCS except that, and Reliance also. Reliance is actually spiking and rising momentum, but except the IT and the TCS, everything looks fine, from the momentum perspective. So, so US indices is still showing the bullish momentum, right? It's showing green. It's in the short-term bullish momentum, and it's at a crucial zone, as you said, in the points favoring the bears, but US indices are showing green. It's in favor of the bulls. This is right. What next to expect tomorrow? So it's an expiry day tomorrow. The levels to look out is 17,500 to 17,700, and for Nifty 41,500 and 43,000. That's the levels that you look for the expiry day tomorrow. But otherwise, we had 3 days of red days with less than 1.5% of correction or a pause or a consolidation, whatever we call it. But momentum has also slipped. But the main thing is the trend is still intact on both indices. And Banknifty has substantial more strength than the Nifty inside of the 3 red candles that's formed it there. Well, the bands are still in the upside expansion of the VIX is in the lower regime in the Fyers, not selling too much, and the US indices are green. So all in favor of the bulls, and therefore my view, as long as 17,500 and 41,000 is held, it remains with a mild bullish market view, right? And definitely there will be a subside. 17,800 would have very big resistance, and after that 18,000 will have that, 18,150, 18,200, 18,300. These are the different hurdles subset there. Tomorrow expiry day levels we already mentioned here, and the resistance levels. Otherwise, major resistance on the medium term remains 18,000, 18,150, 43,000, 43,600 levels on the Nifty. Downside, the supports will be 16,750 and 16,650, 38,600, 37,400. These are previous lows. That's it. View is a market view is still bullish. We have had 3 days. We are at a support zone. There is a possibility of a bounce from here. Momentum has slipped slightly on Nifty, but otherwise we are good on the trend and the overall momentum perspective. We are in between sideways and bullishness, you can say. Right, so that's my view. So always protect your capital, and then looks is low, you can take risk, but portion size properly. If it's spiking up, about 20 kind of levels, only then you have to be a little cautious. But protect your capital is what you can do, and take risk when the looks is low. You can have counter spread kind of strategies. Always take other spreads. If you have all-night positions, you go for counter spreads or the vertical spreads, or direction strategies like iron condor and iron flies and all that. Right? So that you define the risk, and you know what you would lose the max. And tomorrow is an expiry day, so you can either have option buying with a hero or zero kind of trades, right, where fixed loss what will happen. Portion sizing is what is important, and also if it's option selling, you can have the hedge portions taken properly and then sell for RTMs and then collect some money. So, right, that's what you do normally on the expiry day, whether you're option buyer or a seller. So good luck on that, and then that's it. So if you're not subscribed, please subscribe and share to your friends and colleagues. We have very few subscriptions. I appreciate the help as well. If you subscribe, please like, comment, and feedback and all that. If you want to avail the premium services, Telegram services, check the description and avail that as well. Okay. Happy trading, happy learning, happy investing. Bye bye.